Today I want to go over the 5 best tech stocks you can buy right now. The macro environment is changing very fast, and these 5 companies are extremely well positioned to carry your portfolio to a promised land of early retirement. So without further ado, let's get started. Coming in at number 5 is Adyen. Adyen is a payment platform out of Europe. They serve big customers like McDonald's, Uber, and Microsoft, and charging their customers without having to worry about things like fraud, acceptance rates, and payment methods. Think about Adyen like the Stripe of Europe. One API, one solution, you plug it in your product and you can start charging customers just like that. Adyen has some of the most impressive financial metrics I've ever seen in my life, because not only are they growing revenues extremely fast, but they're doing it profitably, unlike some other fintech companies such as Square. And since they service so many different industries, they're extremely well diversified from a product perspective and from a customer perspective. Like, I don't see people stop eating McDonald's or taking Ubers if we have a recession next year, for example. Adyen will take their 2% processing fee regardless. So owning Adyen stock is like a tax on payment volume, where you, my friend, are the IRS. Coming in at number 4 is Robinhood. Robinhood is such a misunderstood stock, it's mind-blowing. Because as everybody knows, Robinhood allows you to buy stocks, options, crypto, and ETFs, and they sell the ability to execute those orders to companies like Citadel, and they make a small cut on that. But not many people know that Robinhood has a big business earning interest on margin lending, stock lending, and cash on hand. In fact, their interest revenues just grew 103% year over year as of last quarter. This was 2 weeks ago and everybody was shocked. And the reason they're suddenly doing well in that business is because, as everybody knows, the Fed has increased interest rates from 0 to 4.5 in 9 months. So as interest rates continue to go higher into next year, Robinhood is extremely well positioned to do well in that environment. Coming in at number 3 is Autodesk. Autodesk builds, sells, and distributes engineering software for a bunch of different industries, from construction to building materials. When you go to downtown and you see a high rise that is very nice, well, they use Autodesk AutoCAD solution to actually build it and do everything from the blueprints to the electrical installations, everything. So if you like making money off the ingenuity of nerds, Autodesk stock might be the one for you. In terms of financials, Autodesk is growing revenues at 15% per year and 50% on the net profit line. And with 90% margins, they're quickly becoming a cash cow. So if you're looking for something like Adobe but it's growing a little bit faster, and you like some quality to your portfolio, Autodesk is one of the best tech stocks there is, period. Coming in at number 2 is Airbnb. And to this day, I'm still surprised how Airbnb is still trading at $100 per share. Airbnb, as everybody knows, is the top marketplace for hosts and guests to do vacation rentals and experiences. This is one of those very rare tech companies that are growing extremely fast, but they're trading very cheap at the same time. Last quarter, they printed $1.2 billion in net profit and $1.5 billion in free cash flow, which puts them at about 20 times price to free cash flow, which is unheard of in the tech space for a company growing this fast. Notice this is before they reopen their business in China, which has historically been a very strong sector for them, and before they relaunch their experiences product, which is one of their main drivers for growth in the future. So if you believe that people will travel more in the future and the work from home trend is here to stay, then Airbnb is by far the best tech stock in the travel and leisure sector. Now, before I get to number 1, I want to do some honorable mentions that didn't quite make it, but they're still great options if you're gonna build a tech portfolio going into next year. So we have dLocal, which is similar to Adyen, but it only operates in the emerging markets. They're actually growing faster than Adyen, and they're quite profitable as well. So if you want a faster growing Adyen with a little bit more risky, dLocal is the way to go. So Shopify comes as a nice alternative to Amazon. If you want a little bit more growth and you want some exposure to the e-commerce sector, then Shopify is a really solid option. So we have Fiverr, still unprofitable, but they're a really good company to give you some exposure to the freelancing world if you're into that. And the last honorable mention is CAD Software, which is an extremely high quality tech name in the world of HR software and payroll. Think about them as ADP or Workday, but much better in terms of growth and financials. To the surprise of absolutely nobody is Tesla. Tesla at this point has proven themselves as the best tech company in the world, and dare I say the best company all around. They're growing revenues extremely fast, they're growing profits extremely fast, they're at a leadership position in terms of EVs and clean energy. They have a lot of financial strength, and for the first time since March 2020, dare I say, their stock actually looks very cheap. Tesla is poised to scale their 2 gigafactories in Texas and Berlin to ramp up to an absolutely mind-blowing volume of 2.3 million cars for next year, which would double their net profits from this year to next year. With full self-driving rolling last week and the Cybertruck coming next year and the semi starting deliveries this week, Tesla is absolutely wonderfully positioned for next year. And if you're a growth investor, it will almost be irresponsible not to have it as a part of your portfolio. Just not have it as extremely high ownership, because as everybody knows, Elon's crazy. So with that being said, I actually made a portfolio to keep myself accountable, and I'm gonna check it in a year to see if I'm actually a good stock picker or if I'm just some noob. So if you found value in this video, I do more than 10 hours a day of research, and I bring all of that in a very chewed up, very easy to digest way for you guys, so that you don't have to spend more than 10 hours a day researching tech stocks like a nerd. So if you found value in that, please consider subscribing, and I'll see you next time.